Options trading doesn't have to be as boring as you think it is. There's so many creative option strategies that you could use to make a ton of money or bail yourself out of a shitty situation. So why is the industry standard buy puts, you buy calls? I'm going to show you 4 of the advanced option strategies that I personally use that elevated my game and took me from plain Jane missionary Max to Big Daddy Max. First option strategy, and one of the most creative ones, is a credit spread, right? A credit spread can help you in a very volatile market like we're seeing right now. A credit spread has so many benefits, the pros and cons, like any option strategy. The main differences between a credit spread and buying a naked call or put, right? So first one, it's inverted. If you buy a call, you're bullish, but if you buy a call credit spread, you're bearish. So that means you want the stock to come down. But if you buy a call, you can only profit if the underlying stock goes up. If you buy a call side credit spread and the stock goes up and drops, you can make money. If it consolidates, you make money. And if it drops, you make money. The reason I love using credit spreads and the reason they're so exciting is because it gives you such a high chance of success and it allows you to play with a safety net, right? If your stock, if the TA isn't following, it allows you to, within the same day, make money even though the analysis didn't play out to your favor. Using a credit spread allows you to profit on 2 of the 3 turnouts of a stock. Either the stock price goes up, the stock price consolidates and goes sideways, or the stock price goes down. But there's a scenario in all 3 where you can make money on a credit spread. Yes, the gains are capped, but that cap comes with a pro. The pro being such a high chance of success. Credit spreads are definitely one of the most creative option strategies out there. It works extremely well, especially in volatile markets, and I think it's one of the strategies you need to learn. Number 2. A creative option strategy that everyone should use, and one of my personal favorites, the debit spread. The debit spread is different from the credit spread. The credit spread is an option selling strategy. The debit spread is a buying strategy. So instead of just buying your naked call, you would sell one call out of the money further away. And what does that do? That puts a safety back on your debit spread. It now caps your gains, but it gives you a higher chance of success. A debit spread is simple. If you buy a call side debit spread, you just want the stock price to close above it. Once the stock price closes above it, you will make the maximum profit possible. The most creative, cool way to use it is when you're under $25,000 and you have pattern day trader issues. The best way to utilize a debit spread, one of the slang terms was a ghetto spread, but the debit spread method. So if you buy a naked call or buy a naked put, you can turn that into a debit spread by simply selling the options contract one further out of the money. If you do this, it can lock in your gains, it can secure your trades. Selling the option puts the buying power right back in your account. My largest trade last year was $27,000 on a Walmart put, and I turned the whole thing into a debit spread and swung it risk-free. Once I did that, my zero gain turned to an $8,000 to $24,000 gain, no matter what happened. The next option strategy, this is the bread and butter of option selling, of passive income, of the covered calls. Covered calls are as simple as this. For every 100 shares you own of any underlying stock in the whole stock market, if they have options available, you can sell one call contract against those shares and start generating passive income. If I buy 100 shares of a stock at $10, I can start selling an $11 covered call weekly. What does that do? What that does is that gives you the premium, and it gives you the opportunity to sell the stock at $11 and capture a $1 intrinsic value move. So if you bought 1,000 of those shares at 10, you sell 1,000 of them at 11, you just made $1,000 plus the premium. It's the best way to consistently make passive income on all the stocks you're holding long term. I mean, it's a no-brainer. I love covered calls. I've lived off covered calls for the last 3 years as a full-time options seller. My options days started off, you want young, crazy, wild Max putting 20 grand on a fucking earnings report because I didn't give a shit. And then once I switched over to the options selling world, I realized, wow, trading doesn't have to be hard. Trading can be stress-free, and trading can produce high returns week over week, just by selling covered calls. So I can buy my dividend stocks, I could buy my long-term, and I can do whatever I need to do. But as long as I sell those covered calls, I know I have a weekly paycheck coming in. Here's a little bonus strategy for you. Since I just covered covered calls, I don't think it's right to go on without covering cash secured puts. It's essentially, instead of using the stock as your collateral for selling calls, you use cash secured to sell a put. Cash secured puts are a cheat code. You can sell a put as far out of the money as you want at a major support level on any stock and collect a premium for doing it. So if you like Apple at 120, you could sell 110 puts every other week and collect a small and nice consistent income. And if it was to fall to 110, congratulations. You just bought the shares at 110 and you keep the premium that you've been selling the whole time. So bonus, one of the most creative ways to enter stocks. There's several ways you can buy stocks for your long-term hold, but there's no doubt in my mind the most creative way is by selling a cash secured put. Number 4, and I'm told you're not going to want to miss this. I kind of cheated and I'm kind of shorting you out here. It's just selling options in general. You need to break the mindset that all you can do is buy options. Selling options to me is king, and it's far more advanced and lucrative in the long run than buying options. Selling options are so much more creative because you have different tools and availability at your expense at all time to make sure you have a passive number of income coming in every single week. I started selling options because I was so sick and tired of staring at a chart all damn day, wondering if I was going to be able to watch this 15-cent move on a stock. I'm tired of doing it. So when I switched over to the option selling world for 15 minutes a week, I can make a couple $1,000s in passive income. It was a no-brainer to me. Absolutely. Selling options is what I do full time, and it's one thing that I am passionate about. I think everyone should learn how to sell options, or possibly even start a second account where you learn how to sell options and create a passive income for yourself. You know, one thing about selling options is cool too, and here's something I like to explain to my students and when I'm in coaching sessions. Most of my students in coaching sessions all have one thing in common. They've lost money in the stock market and they're looking to further their education. And I always say, you want to know what's interesting? If you were to just put the sell button in now instead of the buy, this whole time you were learning, you would be profitable, because those losses would be your gains if you were just to sell the same exact contracts that you were buying. Even if you don't want to come learn over at Max Options Trading how to sell options, I highly suggest you learn how to sell them for yourself. It's something I'm extremely passionate about, and I guarantee you it could help you become a better trader, a more profitable one, all in time. Did you like this video, boy? Make sure you like and subscribe. If you want to learn more about selling options, then make sure you follow, like, and subscribe, and we'll see you next time.